Let's concentrate first on the year of commencement, just that 1 year. Let's take it nice and slowly. So let's do a couple of examples. So first of all, we need to know what the rule is. And the rule is that in the year of commencement, the profits that are assessed are the profits from the date we started the business, the date of startup, or the date of commencement indeed, to the end of the tax year. And the tax year is from the 1st of the 1st to the end of December. So it's calendar year. It's calendar year. It's handy enough. Okay. And that is the rule. And these rules, by the way, only apply to a sole trader. They don't apply to a limited company. Okay, so the first example we look at is, let's say, example one, I started or I commenced a business, and let's say I started it on the 1st of October 2024, and I made my accounts up until the 30th of the 9th, 25. So that is 12 months, my accounting period. And in 2024 is my year of commencement, and I will be assessed on the profits that were earned from the 1st of the 10th, 24 until the 31st of the 12th, 24. So how many months is that? All of October, November, December. That is 3/12, 3 months of how much? Well, let's put a figure on this. So let's say that the profits that I made were 10,000 over that 12 months. Well, then it'll just be 3/12 of 10,000. And that gives me, I think it's 2,500 divided by 12, multiplied by 3. Yeah, 2,500. So for the year of commencement, I will only be taxed on a proportion of that because it goes into the following tax year. And I'm only interested in the 3 months relating to this year to bring me to the end of the tax year. Okay, leave a space there and let's move on to the second example. So let's say I started a business and let's say I started it on the 1st of July, or sorry, June 2024. And let's say that I made my accounts up until the 30th of May 2025, 12-month accounting period. And let's say that the profits that I made were 8,000 in this particular example. So the year of commencement is the year I started, which is 2024. So 2024, it'll be the profits that were earned from the date we started to the end of the tax year, the 31st of the 12th, 24. How many months is that? All of June, July, August, September, October, November, December. 7 months. So I only need 7 months of the 8,000. That gives us 8,000 divided by 12 multiplied by 7. And that gives me 4,667. Now, leave a space there. What about this situation? What about if I started my business on the 1st of June, 2024, but for some reason or other, I may only made my accounts up to the 30th of the 11th, 24. And that can happen. That can happen with a sole trader when they start up. So for some reason, whatever reason, it was a very short accounting period. Okay. And then the following accounting period was from the 1st of the 12th, 24 until the 30th of the 11th, 25. So that's our 12 months. And sure, look, let me do another one. Let's go the 1st of the 12th, 25 until the 30th of the 11th, 26. And let's put some figures on this. So let's say that was only 2,000. And let's say that's 10,000. And let's say that that is 15,000. Okay, so what is the year of commencement? Now watch what's happening here. If I do a little diagram, not drawn to scale. So if I started on the 1st of the 6th, 24, and the first counting period, I went as far as the end of November 24. And the next accounting period brought me down as far as the following year. So that's 12 months long. Now, the problem is this 2,000 and that's 10,000. The problem is that for the year of commencement, I need to take the profits that bring me to the end of the tax year. So I need all of the 2,000 plus an element of the 10,000, all of that 2,000, because all of that happened within the year. Up here, we had to apportion it because it straddled two tax years, but here you don't. You take the full 2,000, all of 2,000. And how much do I need here of that 10,000 to get me to the end of the tax year? 1 month, a twelfth of the 10,000. And that gives me 10,000 divided by 12 is 833. And that's 2,833. And that's the rules about the year of commencement, with a bit of a tricky one thrown in at the end. Now, then you have a rule about the second year. And you ask yourself a question, and I'll do it in this one first. You say, this is 2025. So this is the profits that were assessed in the year of commencement. And in 2025, you ask yourself two questions. And the two questions are, is there an accounting period ending in 2025? An accounting period ending in that year? And is it 12 months long? So I can see there is an accounting period ending in 2025 and it's 12 months long. So therefore, I will pick up that 10,000. And the answer is yes, yes. So the assessable profits for year two are 10,000. And you're looking at this and you might say, Paula, are you making a mistake there? Because I can see that in 2024, you've already been taxed on a twelfth of the 10,000. Well, that's the deal. There is a possible double taxation of the same figures. Now, however, there is a taxpayers election, and we'll talk about that in one moment. So in 2026, you ask yourself the same question. Is there an accounting period ending in 2026? And is it 12 months long? Yes, it is. And therefore, it is 15,000. So they are the assessable profits of 2026. Now, let's talk about the taxpayers' election. And the taxpayers' election is that they can revise the second year. In this instance, it's 2025. They can revise that to actual profits. Now, what does that mean? Revise to actual. Well, actual means that instead of being taxed on the accounting period profits as they were here, they can instead take the profits that were earned from the 1st of the 1st, 2025 until the 31st of the 12th, 2025. So not take the accounting period ones. Okay, so we'll test for that and let's see if the taxpayer will make that election. So I need to go back up here. So beginning of so I need 11 months of that, and I need 1 month of the following year. Remember that this brings me down to the 31st of the 11th, 24. Sorry, the 31st of the 12th, 2024. Whereas that 10,000 has a month too many because it is from the previous year. It starts 1 month from the previous year. So I'm only going to take 11 twelfths of that 10,000. I'll do this in red. 11 in red. twelfths of the 10,000 and 1/12, because it's 11 and 1 is 12, of the following, which is 15,000. Now, let me just bear with me when I do my calculations. Divided by 12, multiplied by 11, and that gives me 9,167. And 15,000 divided by 12 gives me 1,250 plus 9,167, and that gives me 1,0417. Just bear with me until I check my calculations. Yes, and 15,000 divided by 12, 1, 2 plus 9, 167. Yeah, okay. So the taxpayer has a choice. The taxpayer can choose to be taxed on the profits that actually incurred on the tax year or on the accounting period. So he can choose to be taxed on 10,000 or 417. He will not take the election. He's happy enough being taxed on the 10,000. But you need to know how to test for it. Let's say that it resulted in lower figures. Let's say that when he revised to actual, let's just say that it came to 9,000. Well, then you would compare the 9,000 to the 10,000 and you'd say, oh God, yeah, absolutely. You would take the actual. So there is a difference of 1,000. And how does he get that? He would take the reduction from the third year. So the third year in this case is 2026. And if there was a reduction to be taken, he would just take the 15,000 minus the 1,000 in my particular little example.